The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We're joined this morning by our man Basil Chapman, filling in for Tom yet again. Basil, good morning.
Good morning to you. Always a fascinating market, huh?
Nothing more interesting than getting those non-farm payroll numbers, especially with the historic volatility we have going on, and kicking things off. Markets in negative territory, but nothing too dramatic right now. The S&P is negative by about 9 points at 33.35. NASDAQ negative 42. The Dow off 108. We got some action in gold. Gold spiking lower, Basil, just since I came on the air even. At 10 o'clock, we were trading at 2,056. We're currently trading at 2,033. We were as high as 2,089 overnight. Gold dropping pretty quickly. Silver contract as well, down 85 cents at 27.52. And quite the Friday to kick things off, Basil. Just covering the jobs number that did come out at 8:30 a.m. Almost 1.8 million jobs added in the month of July, 1.763. Unemployment rate falling to 10.2%. Expectations were for about 1.48 million with 10.6% unemployment. So pretty good number at 8:30, all things considered. Market jumping back to the S&P. The market spikes briefly on that 8:30 number. Gives it up until the open, and from there we're up a bit. So yeah, interesting action so far, Basil. Really, I mean, the gold, the silver, those commodities moving pretty dramatically. The market pretty tame for everything going on in that jobs number this morning.
Yeah, so this is going to be an important moment for a couple of reasons. One is, if you look at gold and silver, let's just do the gold first. Gold, in my work, has gone to a leg F/C. Everything about it has the characteristic of an F. If today is a very big red candle and there's a follow-through downside Sunday night into Monday, and that would say we've begun a consolidation. And even though I'm saying that it could be more time than price, we always have to look at price. And it's at 2,040 right now, down 28. And I suspect that if there is a close by Tuesday, at the latest Wednesday, below 1950, then it's going to be time and price. But if we just manage to pull back today, have a bit of a bounce on Sunday night, or maybe Sunday night, it looks bad because of Friday's close, but all of a sudden, intraday Monday, there's a rally. If there is a rally, it's going to say to me, there's still enough buying to make it just a kind of a rectangle sideways consolidation. Well, and you can see exactly the same thing here in silver, except that the silver weekly chart is only in leg C. There should be a D. All the others and all the key metrics that I look at, whether it's the very top tier NASDAQ type stocks, most are on the weekly Ds and Es, and they're all ready for some kind of a pullback. And you have to put, just in terms of timing and trend, that gold and the high tech or the tech stocks that have been leaders have in fact just gone on and powered higher. And yesterday's surprise move to the upside. I call it a surprise move because, but actually the 2 days, you remember we were talking about that Mariposa candle, the big candle that has no wick, and we had another one yesterday. And to me, that's saying that some people have just kind of given up the short side completely. I don't really have statistics for that. But at the same time, everything emotionally that I look at had yesterday as a kind of a sucker's rally, and that anyone who's looking at what they bought yesterday, especially after, say, midday, if those stocks pull back sharply today, they're going to start being sellers going into next week. And that says we've got to really look at the rotation. And if you look at gold, at the dollar has been attempting for a few days now, if I can get to it right here, the dollar's been attempting to make some kind of a stabilization. I don't know where we're going here. Let me try that again, DXY. There it is. Look at that strong move. It's up 0.73. I say strong move on the day. It's one of the biggest green candles we've had in actually going back all the way to mid-June when it was at 95.72, trying to rally to 97, made that arch formation. So the dreaded H formation, like an arch, took out the left side low of 95.72 and just plummeted down. And if you look at the euro, look at this. Yeah, the euro is at peak D.
Crazy action in the euro. We just dropped from, what, 118, like a whole penny, 118.50 to 117.60.
It's a big move. It's a big move, and it's a leg D in the weekly chart as well. And as you know, the fourth highest peak in the Chapman wave, peak A is the first, B is the second, C is the third, and D is the fourth. It can go on to 7 higher peaks, but that fourth peak is where we start looking at a potential for a turn, and here we have a turn. So I'm just saying that the response, we don't have a minus 380 right now in the Dow, a minus 36 in the S&P, NASDAQ plummeting. The market is handling this news very well, and that's all I look at. How does the market handle news? That's my dark news cloud cover. If it feels emotionally like it should be a really bad response, and the market does quite nicely with it, I say, you know what? The market is taking whatever news there was this morning about the non-farm payrolls and saying, you know, it fits in together with all the other things that the market's been looking at, and it's holding well. And now we're going to see, do we have a consolidation in the top tier stocks, in the top tier sectors like gold, silver, maybe even platinum? And do we start to see something changing? It doesn't have to be for long, but at least a breather so that the dollar can rally some, euro can take I mean, that's a spectacular move. Just even most recently going from 1.11 to the high of yesterday and the 1.18s, I mean, or 19s. That's a big move for currencies.
Yeah, it is. And that's, the first thing I always think about, and I always see that type of a move in gold and silver, crude as well, right? Commodities moving in a big way probably can tie into something going on in the currencies, and that is the case for sure. Just jumping around, Basil, like you mentioned, some of those FANG stocks. Facebook, it is a rocket ship, man. It just doesn't stop. 272, just from under 250 yesterday to the open on them trying to get into the TikTok business with Reels on Instagram. I've been seeing some of my friends on there. Don't use Instagram that much. I like scrolling Instagram occasionally. Facebook trying to replicate that in a similar fashion as they kind of tried to replicate Snapchat originally, taking market share from them, but the market loving it up to 272. There's definitely some rotation going into Facebook shares over the last couple of days, Basil. Even Amazon, though, holding well above 32.20. Apple shares right now basically off about 0.7, but still above $450 for the price of Apple, and Microsoft at about $215 itself. Checking in on the VIX, 2273. Quite a price tag for that VIX as the market holding up relatively well. You could make the case, Basil, that it could be higher, though, on almost 2 million jobs added. There was a lot of uncertainty coming into 8:30 in the morning. Things obviously could have been worse all the way to a decline. So a little bit of that fear taken out of the market, and we get the S&Ps at 3338. Right now, you're within about 2%, 1.5% of all-time highs. NASDAQ negative by just 24 points. Stay tuned, folks. Basil and I come back in 3 minutes.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We get the S&Ps right now, negative by 8. NASDAQ negative by 38. Dow off 103. That gold contract holding steady at about $2,040, off $30 for the session. So, Basil, I see you got that oil contract up there. Oil? IWM. We just flashed away. I thought we were going to jump there. I know we got a listener call talking about the IWM. What are you looking at for some of those small caps?
So our listener from Fort Lauderdale, Dave, wants to know about the IWM. So he's not saying whether he's long or short or whatever it is. He's just saying, could we look at it? So this is a really good example of something that I've discussed. I think it's since the March low. I've been showing the pattern that I call the rectangle formation and how I grab the top part, especially if it's at a peak D, and I drag my rectangle, whatever this in trade station is just an easy thing to do. You've got this pattern already, and I just drag the outer corners. I take it from the high to the low, as long as the low starts a nice bounce, and then I just draw it out to the right. I use other techniques to talk about time, and this is a wide. In other words, the distance from the top to the bottom is not one of those little narrow rectangles that I say they can last a lot longer than your patience, where it just keeps going to the top, you think it's going to break out, goes right back and goes to the bottom, then it goes, you think it's going to break down, nope, it goes back and it just wiggles around like a sine wave, like a worm in a tube. It just goes up and down, but it doesn't break out until much later. This is a little different because within the context of this particular pattern, I usually look for, in a smaller time frame, at least a peak D, but you can do it in the actual chart you're looking at. So at 153.39 on the 8th of June, that was the most recent high. Sharp pullback to the 133.80 level in just really 7 days later on the 15th. That was a quick move. And then it starts a rally, and the rally kind of made it a lowercase h to a successful lowercase m, which says that if you can take out the top, the arch high, at any point close above it, there's a really good chance you're going to go higher. And that said, hey, the rectangle formation is still active, and therefore there should be a rally towards the 153.39 level. Well, look at the way it crawls along the green 9-period moving average and the 14-period moving average, and it used that as a springboard. And then 3 days ago, what did it do? It went above 153.39. So my rule of thumb is, in the rectangle formation, you can see a rally that'll take you just under, right on, or just above that previous left high, call it the flagpole high, in this case 153.39. And then you got to monitor it closely because there could be a pullback. It could take you to about 1/3 down of that high back into the rectangle. But if you close, not you, but the price we're following,
sure.
If it closes nicely above the that major high, in this case 153.39, for 2 out of 3 sessions, you've suddenly turned one of the important moving averages or a gap or a trough into major support, which raises the base of support. Well, we actually are just slightly higher today. We went to 154.62. That's just a 1.25 points higher than. So it's still in that range, but you had a little doji candle and you took out the high from yesterday. So far, what we're looking at is the chance with the IWM up 0.63 at 154.34, up 0.4%, when the general market is pulling back. You have a chance now in this rotation that I've been anticipating to see something like some of the cyclicals, some of the small caps, and this might be an easier way to play than actually choose small caps because the market is still vulnerable. You might choose the only one that just doesn't do anything or drops sharply. So this is maybe a safer way to play, but it is a leg D. And it's a leg E, a nominal new E in the weekly chart, but the MACD and stochastic are already strong. So I'm looking at the IWM and I'm saying, if there is a rotation, and if it's begun, which I think it has already, because we can see that the IWM has gone to a new recovery high, not an all-time high, which was up at 173, it says that there's a really good chance that this is going to become a viable entity to hold better than maybe some of the other sectors. So I like it. Do you buy it here? Well, this takes us to the whole thing that we've been talking about all week. What happens when something that you've been looking at gets away from you? What do you do when you're still positive, but you're a little nervous and saying, I once drew this cartoon. I actually showed it. It's in my CD on my methodology where this couple is climbing this mountain and this guy, just as he gets to the top, his wife says, what are you seeing? He says it's deja vu, because he's looking and on the other side, the cliff is just a straight down drop. So,
sure.
This is what you do. Am I the one that's going to be holding the bag right at the top? No, I think that this is a really good sign. And therefore, if you were going to buy X amount at some point and it got away from you, now, because of risk reward, you have to buy a little bit less, or you could just put your foot into the water. You could just say, okay, I'm going to start a position in the IWM. I know that this is the most recent high. It's way above the 95 low that was made in March. And, talk about 60 points above it, and that's 2/3 higher. So that says that, yep, you could be, in fact, taking a higher risk reward. But why not just put your foot in the water, start a position, give it a little while, and if there is a pullback and it's holding better than the other indices, let's say in 2 weeks' time, you know that you've got yourself at least a better performer. So that's one way to do it. In other words, you lessen the risk by taking a smaller position if that's what you wanted to do, but it got away.
I would completely agree. I look at Disney, and I was talking to some friends and family members just over the last couple of days. Disney with strong numbers, of course, coming out. And I've been a bull on this stock. And I've said, at these levels, if you're a long-term investor in the similar way, right, doesn't mean that you step in today when the stock just went from 115 to 130 with your entire position. But you got to put things in context. And if you're a long-term investor, taking a position at these levels, stepping into it, if you try and peg any position on this Disney chart, you could be in trouble for the short term, as in you go from 100. You go up in early June to 127. You go back to 107. You go up to 122. You go back to 113. You're at 130, right? There's a lot of winning and losing in those short-term variations. You try and get them out of the way by maybe stepping in small and looking for the long term. Because if you're taking a position for a long-term trade, then stepping in over the course of 7 or 14 days shouldn't usually be the difference of a substantial win or a loss, right? And so you just try and pull those maybe out of the scenario a bit, because all over the place we're still dealing with a lot of variance on a daily basis on a lot of different equities as we get some of these uncertainties that come from the market. But the Russell especially, I hadn't seen the Russell on my radar. The only index right now, green, and over those early June highs. And that's what, as you pull up a lot of these stocks, struggling to get back to those early June highs, but the Russell even over that level at 1550. Okay,
all
folks.
We're doing is we're looking at relative strength right now, and that's important.
Yeah. Oh, it's important. I would agree. At a time when you've had these big tech stocks, go up 100%, are they going to hold that, or is there going to be some of that rotation maybe to some of those smaller cap stocks that have not benefited so much in accordance? Okay, folks. Basil and I come right back in 3 minutes. S&P is negative by 10. Dow negative by 126. We'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. S&P is just hanging around that negative territory, off about 7 points right now. Dow off about 100. I'm going to start it off with a couple of shippers. FedEx, look at that acceleration, Basil. FedEx up 3.5% today. Good time to be in the delivery business for items as people are shopping online. And how about Stamps.com? up to 308, up 18% today. And talk about a story of living and dying, Basil. Stamps.com. We go from, I thought of you this morning doing my 8:30 a.m. program, that cup formation, right? You talk about the symmetry of formations, left side, right side. How about a $280 left side, right side from 2018, 2 years ago? You go from about 275 down to 32, and you get it all back. We're above those levels at 308 on Stamps.
So this is an interesting one, because I love the symbols that tell you what they are. It's like when I do my Chapman Wave methodology, and I call things the drop bucket pattern, the dreaded H. I like to give them nicknames because that explains the whole thing. If you understand what I just said, then you understand the whole process. So
no need to explain that, right?
Right. So I'm looking at Stamps, and I'm saying, why on earth would this thing go from, like, when I noticed it was at like 53 or something like that a couple of years back. Next thing I know, it's trading at 250, then 260. I think it almost touched, 200, almost touched 300. And the next thing I see is something with post office, and this is the candle that we were looking at. I think it was January of 2019. Let me just double check what date that is. February. And it goes from 207 down to 82. I would call that a little bit of a pullback. And then it continues lower. But then I never understood why I was looking at it and it kept moving up, because whatever they were doing was obvious. I understand the whole idea of not going to the post office, doing it yourself. I mean, that's just part of this 21st century. That's what we're looking at when you look at DocuSign. You're looking at anything that has an innovative technology that saves time, saves money, and just makes things very easy, where you just stay at your desk and you're doing everything. But to have gone from the 40 area, this is I don't even know how to explain. 32.52 in May. This is May of last year. And here it is at 311. So this is something that I can't dismiss. This is a technology that uses all the techniques that are available today to save time, save costs, and it's in play. And how I kept looking at it. I never really studied the whole thing, but it makes absolute sense. I'm
going to be studying it a little bit this weekend, because I just I like to add some fundamentals and things. And I want to understand how you go and what they've done to those deals. Because, that first drop-off had to do with them ending the deal, right, with the U.S. Postal Service, the dramatic reduction. I think they did get some type of a deal back together. But the last 3 earnings cycles, Basil, when you put this on a weekly, in Thinkorswim platform, I love how it marks them to the week, man. They pop. You had it go from 88 to 185 in February of this year. Then you had it go from about 150 to 200 in May. Now, of course, we get the pop to about 311. Just remarkable. And, their numbers.
That's a 12-week U-shaped pattern with rising highs and rising lows. Let's see what happens at the end of this week, because we
see a lot of those U-shaped patterns, Basil. We don't normally see them from almost $300 to $30 and back, but this is an exceptional time we're living in, and we're seeing a lot of that, and only something like this where online retail just exploding. So perfect scenario for them to recalibrate, get their ducks in order, and they're at almost $320, and they beat to an epic proportion. I mean, they took in. Let's see. So they had $3.11 a share on $207 million in sales, and they were only looking for $1.26 on $153 million. And they raised their guidance, which the market loves. They're going to take in sales this year $650 to $725 million, and previously they were only looking from $570 to $600. So
once you get this, you don't. I mean, this has got the coronavirus can only help, in the sense that even if there is a resolution to it, once people have started and they've signed up, I don't think they're going to change. They're going to stay with us.
Oh, I agree, especially now that we've stuck in this period of ambiguity for so long, right? That it is building almost new habits, even if you didn't build them originally. We're now in a period of approaching 6 months of a new normal, whether it's cooking from home, whether it's ordering items on retail, Amazon, Walmart delivery, just picking them up. I would say that's here to stay for sure.
Although there was an interesting front page headline, not a headline, close to a headline today, saying the traffic is back in Boston.
Oh,
Isn't that
no.
interesting? Yeah.
That's the one thing you can't avoid coming back, the traffic. You know, it's been lighting up a little bit in Tampa, and we have our share of traffic. Nothing like that 128 corridor. But I imagine you're seeing, you know, the one place, Basil, that I personally would not be investing in real estate is some of those, you know, and love South Boston. But, man, when you build an empire around a big city that involves thousands, if not tens of thousands or millions of people in the same buildings and so forth, and then you obviously all of a sudden have this ability to work from anywhere in the world practically,
Things
right?
are changing. Yep.
There might be some exodus from those centralized locations, but on the other side of that, maybe in a year or two that comes back strong, because I was talking to friends this morning. Can't wait for those times when you're going to be able to go to a concert, folks. You're going to be able to go to a sporting event, right? You're going to be able to go into a big city around millions of people and have no fear. And so that's going to come.
The other thing is, as the huge companies start to decrease their square footage in all these offices around the country, I would not be surprised. You know how I always say it's like politicians, where I always used to talk about Bill Clinton. He was the one politician, in textbooks, he was the politician's politician. He would be able to sit at the back of the train, see which way the wind is blowing, and when the train reached the station, he'd be able to jump out of that train and say, the wind is blowing that way. So, that's just beautiful politics. So my thinking is that as they start to shut down, people are going to say, you know, I can't really work at home. I miss seeing people. I miss getting out. I want to go to work. I want to finish at 5 or 6 o'clock, go home, unlike some of us who spend 24 hours a day.
Sure.
I'm done. I don't want to think about work. When I'm at home, I'm working at 24 hours a day. This is what most people, I've been doing this for 20-something years.
Yes.
But some people have never done this, and I got a feeling they're going to want to get back to an office or something like it, even if it's a few times a week. Hybrid, maybe.
And I would agree definitely with that, the hybrid. I mean, if anything, right, there's definitely, and there's tremendous human value just to being around people. You know, I was in the office more so. I was already working from home in some capacity myself. We're fortunate what we do at TFNN with working online, whether it's streaming in and all that stuff, computers. But I was in the office on a much more regular basis. It's really not necessary. So while things rage in Florida, at least, right, keeping my distance when I can. But yeah, the human interaction level, being around, couple meetings, some lunches, so some fostering that creative, you know, the juices that flow around people. But in the same respect,
ideas, that interaction is really important. Yeah,
it is. It's not the same. Just like some people, you know, you love reading those actual crisp newspapers. I know my dad's a big fan of that. It's not the same. You open your computer and you're staring at a screen all day.
I get Investors Business Daily electronically every day. I still want to get the newspaper. I don't see everything I'm supposed to see when it's
physical
electronic.
touch, right? It's something about that to your brain for sure. Stay tuned, folks. S&P is negative by just 4 right now. We'll be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Tommy O'Brien, joined by Basil Chapman. This morning, we get the S&Ps negative by just 3 points. We're kind of at the upper range of where we were early this morning. Basil, 3340. NASDAQ negative by 25. The Dow negative by 40. I'm going to jump in real quick for just a COVID update for some of the numbers that I'm looking at out there. Good numbers in terms of the curve. In terms of it declining, when you get into the curve, we're still at pretty staggering numbers with a 7-day average of 55,000 cases. Can't deny that that is dipping down, though. Hopefully that trajectory continues. When you get into Florida, similar action here in terms of a declining curve. Some pretty tough numbers still, though. We're dealing with a 7-day average of about 7,000 cases. And hopefully we see a dip in that death as well for the first time. The state numbers just out. They come out every morning, Basil, at about 10:30 a.m. Eastern time. So this data as of current today, as of yesterday. Now, tying it back, here are our charts and the cases. We saw some numbers at about 4,000 on the 3rd, 50-something hundred on the 4th, 50-something hundred on the 5th. A lot of variance this last weekend in Florida, especially, Basil, with the storm coming in here. Weekends always as well. But then you did see the rise of 7,650, and then we got another 7,000 number. We're dealing with 77.
Tommy, is this still your first, for what they call the first phase? This is not a second phase. This is your initial phase. Like New York was the epicenter
of
at one
opening.
Point
You
in
know,
Boston.
Basil, I think we're way ahead of that. Unfortunately, I haven't been following along too long because it seemed so ridiculous, kind of what was getting pushed early on when we even hadn't quite settled the curve as far as we thought we should have. And it turned out, no, we had not. And so the numbers rose. I mean, we had indoor restaurants. We had everything early on when the Northeast was getting hit so hard.
And you've got beaches all over the show, right?
And beaches are, I've been to the beaches. Beaches are great, folks. Being outside, you know, it's great. The place that this seems to be so troubling is when you get indoors, trapped with people, no matter where you are. It's very tough to remain socially distant, number one, and even if you can, the droplets in the air are tough. But just, you know, yesterday was the most encouraging day we had in Florida because of the percentage, under 9% at 8.3% positivity. Today we're back above 10%. As traders, we know about variance. There's a lot of variance in these numbers. Hopefully the decline continues. Not what you wanted to see today. I was especially interested, Basil, just to take a look because of what we had happen yesterday, you know, those low positivities. I think New York had talked about, they want it below 3% to have the schools open, something like that. And already now the schools issue, so tough for families with kids. And you know, there's no simple solution across the board on this. You know, people get pretty heated for understandable purposes because it affects your life in such a dramatic fashion. But when you have numbers, 10,000 people, some people are going to want to send their kids back. Other people are going to be very difficult in that situation. Some people can't do it any other way because they have to work and they have children. And what do you do? In Hillsborough, though, just yesterday, so they are delaying it by at least 4 weeks. that they're going to do online learning. Polk County right next to it seems like they might follow suit somewhat. The governor, folks, in this state, he seems almost absent in this. Thankfully, localities, hopefully they take over. We'll see what happens. But tough numbers, a little bit of hope, you could say, in some of these cases numbers in a declining curve. But when you look at 7,000 cases a day and schools literally beginning to open as we speak, some tough deals. And I bring it up because that's going to weigh on the economy. You know, you have schools shutting down in Hillsborough.
And you've got this interstate. I mean, this is a big thing for people. This is the period right now where people like to get away and do things. So the interstate, some states allow, some don't. Some allow only from certain other states.
Listen, I have a wedding, Basil, of a cousin who is getting married in September now. They're supposed to get married in April in Boston. Probably not going to attend because it's very difficult from the state of Florida, where states like New York and New England will make you quarantine for 14 days. How do I go up there with 10,000 cases a day and see my whole family over the course of a night? Very difficult.
Decisions, yeah.
It's a real life, you know, and then the economy impact of that, right? So I don't travel. I don't buy an airline ticket. I don't take an Uber to the car. I don't eat out with some friends and families while I'm up there. And let alone that now you have schools shutting down for 4 weeks, not even happening. And then, you know, I'm a Disney bull, Orlando. You know, flying a family down at such high numbers to those parks, not quite what you want to see as well. So it all impacts everything, man. And then, of course, we have Congress that's pretty much at a stalemate, it looks like. Not even going to have talks, I guess, today. We'll see how that progresses over the weekend, but not what you want to see when you talk about the stimulus that the economy might be looking for. All right, so what else are we looking at, Basil? I know you got your program coming up. I see a chart up there. What do we got?
Well, I had a question in the den. What was the question about Bitcoin? This is the Bitcoin Investment Trust. Yes. Basil, will you take some GBTC off the table or just hold? What would be a re-entry point? So it made a peak very sharp daily candle, very sharp move down today, but it's only going to the gap from 3 days ago. So the ones that have moved really sharply, when they pull back, you think, oh my God, and then you look and it's kind of back to where it was a couple of days, just, you know, days ago. So I would say if you're a long-term holder, Bitcoin, to a certain extent, I said, is the distant cousin of gold in the sense that it's for people who are looking for something that in the economy says there's another way out. You don't have to be in the dollar. You don't have to. There are a whole bunch of things going on. It's the other in investing. So I would say that if you're a longer-term buy and hold, I don't think I would do anything. What I would do is I take a little bit off because it is a D in the daily and it's a leg D in the weekly, but the technicals are strong enough for me to say could be a sideways consolidation. It's a 1345, but sideways going from 1345 to 1220 or even 1180, it looks sideways, but that's a big percentage. So you have to feel comfortable. If you're prepared to hold it and another particular person asking is quite prepared to hold, as long as he knows that there's a greater chance of moving higher over a period of time. So if that's your case, take a little bit off now and kind of prepare to put that back in the 1275, 1230 area, because even if it goes lower, you're getting it for maybe 8% or 10% less than where it is now. That's the one way to do it. And the other is if you are a short-term holder, I would recommend definitely taking some off now and just have patience when you want to put it back. There's 2 or 3 different ways of dealing with this, but this is only the first sign that it could be a little toppy. It could still have a bounce towards the 1450 area, but I'm just saying this is probably the moment where it's done so well. I mean, it's gone from the 9s to the 14s. That's a huge percentage.
Definitely. I mean, pulling up the chart of Bitcoin, I mean, pretty remarkable that you go down to 4,200 in March, and we've like tripled that almost to about 12,000.
And the Bitcoin Investment Trust went from 38.71, and that high that was made, I think it was December of 2017, and plummets to $3.66. But, you know, a real crash is when these things just don't come back. So this is saying, yep, it's still in play. It was a maturity thing. It was just too many people got on board when it wasn't really. It's like the marijuana stocks, the cannabis area, MJ. Yep. just too much too soon. Now you're starting to settle. They're becoming mature. There's a different plan, different program that you can have. Think of it a little differently. Now they're survivors. That's the way to put it.
You know, that's a perfect segue, Basil. We'll take a look at some of these cannabis stocks because Canopy, they're getting clobbered again today. They got their earnings on Monday. We had some earnings out for them this week, and yeah, they are struggling before they possibly make a run higher. Stay tuned, folks. We'll be right back.
59, now 70.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the NASDAQ futures. NASDAQ 100 climbing into positive territory as we speak. Basil, I'm going to give it 2 seconds and we'll have the S&Ps positive. I joke, but right now we're flat. 33.44. You see where we are, folks. The highs last night within about a few points. Quite a charge higher. Checking it on the commodities. Gold, negative $22 still. We got, and where are we? Crude, negative 48 cents at 41.47. So quite the pop we've had, Basil, so far on those numbers. I see you have a chart of the Dow up there. What are we talking about for the Tiger Technicians Hour at noon today?
So for my subscribers, I show them this chart. Yes, that rectangle, same thing's been happening in so many stocks. We headed towards the breakout. We broke above that Chapman wave inside track repellent zone. Now we've got a resistance zone up here. We're in leg C. We need to get to a leg D, and then I have to look at it and say, okay, assess it for some kind of a pullback. But so far, I really like it. And one of the reasons why we've stayed along the Dow from the low of March 23rd is because the rotation within the sectors of the Dow 30, it's not the Dow Industrials, although it's called that, it's the Dow 30. I like the mix. I really do like the mix, and it's going to benefit in the long run. So I'm still a Dow fan.
So jumping back real quick to these cannabis stocks I want to jump to. So Canopy, they've been down pretty dramatically. They have their earnings out on Monday when the Tigers in the Den saying maybe they just launched an online store, but of course a little too late for the numbers they're going to be pushing out on Monday. Kronos was out with their numbers early this week, and they started the slide for all of these, putting this on a 15-minute out early Thursday. You trade from 7.
So what I'm going to do is on my show, I'm going to talk about Constellation Brands, how they went from spirits, etc., and the moment they turned around, they went to the cannabis sector. Look at that. They did nothing wrong until that very moment, 2018.
It's been some painful situations in the short term for those cannabis stocks, man. We are not there yet.
Yeah.
Good. I'll be listening to it, Basil. I love that Constellation stock. I'll be tuning in. Thanks so much for filling in this week, and have a great weekend, man.
You